Tuesday, before the market opens, SoFi will report its latest quarterly figures. Right now, at the time of making this video, SoFi is trading at above $12. It has a market cap of $13.5 billion. Now, I'm going to talk a little bit about my predictions for the upcoming quarter and, of course, talk about what has happened with SoFi in the last couple of weeks and months. Now, of course, with SoFi, and I've seen a couple of comments already, oh, SoFi, you've been talking about that company for quite a while, and it hasn't done much. Well, yes, of course, if you bought in 2021, right? If you only bought when the markets were extremely overvalued, then yes, it's true, you would be in the red right now. But even if you bought, let's say here in 2021, but then you started buying in 2022, you started buying in 2023 as well, I think you would have been in the green right now. And actually, if you bought in 2022, right, in the last 3 years or so, you would be up 80+% right now. There were plenty of opportunities to buy SoFi around $6, $7, $8 for a long period of time. And I think most retail investors did use that time to accumulate and have increased their position considerably in the last 3 years or so. And then, of course, towards the end of last year, we've got a huge rally. And then after that rally, well, we did come down. So if you look at year-to-date performance, of course, we are still down around 13% or so. But talking about SoFi for a long period of time does not mean that we're all in the red. No, most of us have actually been buying and loading up more and more every time it did drop under $10. So let's talk a little bit about the predictions. Let's talk a little bit about the quarter. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, let's first talk about the guidance that they gave us 3 months or so ago. First up, full year 2025 guidance, they expect adjusted net revenue to grow between 23 to 26% year over year, and diluted earnings per share to be between 25 to 27 cents. Now, these are the assumptions that they're making right now. Interest rate outlook consistent with the forward curve and just north of 1.5 rate cuts, GDP expansion of just 1.2%, and normalization of unemployment in the 5% range, continuation of normalized credit spreads across capital markets, and stabilization of consumer credit. So definitely not rosy assumptions there. Now, they also said that they do expect member growth of at least 2.8 million or 28% from the 2024 levels. This was also a question mark 3 months or so ago. You're trying to grow faster, yet we're only going to grow 28% year over year. I mean, remember they say here at least 2.8. I think they'll beat that figure quite easily. And then for Q1 specifically, they expect adjusted net revenue between $725 to $745 million and diluted earnings per share of just 3 cents. They said looking forward to 2025 after a year of bolstering the capital base, reaching GAAP profitability, as well as the scale required to drive continued profitability, management wants to better tilt the incremental revenue growth towards investments. And so these are my predictions for Q1. I expect new members to be around 810,000 with a CAC of $290. I think Q1 is going to be a very strong quarter for them. And of course, if they can manage to be around 800,000 per quarter, well, that's a quite easy beat of the at least 2.8 million new members for the year. Now, this is just Q1. I think Q1 will be a strong quarter. They also had that TGL event. I think that was quite successful. So Q1, I have high expectations. For Galileo, I do expect it to decrease quarter over quarter to be back around $100 million. But please do surprise me on the upside. As for adjusted net revenue, I think they'll beat their own guidance quite easily, just like they did in all of the past quarters. So I expect $780 million in adjusted revenue and adjusted EBITDA of around $208 million, which then leads me to an assumption that EPS could come at around 4 cents. Now, currently, what does Wall Street expect? Well, Wall Street expects revenue to come in at $739 million, EPS to come in at 3 cents, so really not that different than what SoFi guided for. Now, what's important to note here yet again that they still reiterated their long-term guidance. So looking beyond 2025, we now expect to exceed our medium-term guidance of delivering 20 to 25% compounded annual revenue growth through 2026 and we remain confident in delivering 2026 EPS in the range of 55 to 80 cents per share. Moreover, we are well positioned to deliver 20 to 25% annual EPS growth beyond 2026. Overall, 2024 has been a remarkable year for SoFi. We are proud of the strong results we delivered and remain confident in our ability to build on this momentum as we move into the year ahead. And of course, you can clearly see we've seen a nice acceleration in growth, especially when it comes to lending revenue and financial services one. Yes, technology platform is still going to be something that we will have to wait for 2026 to really see some accelerated growth. But in the meantime, while others like to complain about Galileo and the tech platform not growing as fast as previously expected, I think I am very, very happy with how the financial services segment is performing, especially with the loan platform business. And this is something that I expect them to talk more and more about during the earnings call. An analyst asked them, I think a quarter or so ago, it's great to see the mix shift in revenue and the rise in fees as a percent of the total. Can you sort of, looking long-term, talk about perhaps where you'd like to see fees as a percent of the total, given your long-term ROE aspiration? To which Anthony Noto basically said, we want to grow it as large as we can. One of the things that we contemplate is, could we push all of our lending into the loan platform business over time? And I'm not opposed to that at all. The economics are very attractive, the velocity is much higher, the capital is lower, you have a lighter balance sheet, it would support high ROE. Which of course brings us back to the big announcement we had a couple of weeks ago. One, the $5 billion agreement with Blue Owl Capital, and two, the $3.2 billion expansion with Fortress Investment Group and Edge Focus. I think this is going to be the focus now on in the next couple of quarters. Of course, we will talk about the, rumored new products that might come out in the next couple of months. But the loan platform business is something that we should all be very, very excited about. Now here, data-driven investing, Chris on X basically, illustrates it quite well. We did talk a little bit about that in a past video. So basically right now we're at $7.5 billion in, annual originations. That might increase, of course, over time. But right now, what does that mean? With a take rate of 4.25%, that means that annual revenue sits at $319 million. Of course, if the take rate goes higher, that means more revenue suddenly for SoFi. And again, this is a fast growing segment. It's a loan platform business. It's not under the lending segment. It is under the financial services one. So all I have to say here again and again is yes, the tech platform Galileo, we still need to be patient to see really what can happen with that side of the business. But let's not lose focus on what is working now very, very well, which is this part of the business. Now, you might or you might not have noticed, but yesterday, Vadim and a couple of others have found out on X that, SoFi is looking to hire plenty of people when it comes to crypto. More specifically, senior product manager, crypto, front-end web engineer, senior full-stack engineer, etc., etc. Now, what's funny and interesting here is that when they talked about the role, they say here that SoFi is building out a new team to develop crypto products and services for their 11 million plus members. Now, the funny part is not that this is an insane number. The funny part is that, a couple of minutes later, they changed it to 10 million plus members. And then an hour or so later, they change it to, not reveal any figure at all. Is this a mistake or is this a leak for us retail investor? Remains to be seen. I guess we'll get our answer on Tuesday. Now remember, any figure right here does not mean that this is only for Q1. This is Q1 and then the whole or almost the whole of April as well. But for those that get excited about crypto and always wanted crypto back on SoFi, I don't think they will be looking to hire all of these people right here if they were not planning on releasing a crypto product. Up next, we've had this announcement. This is not a rumor. No, this is a real announcement from SoFi. So SoFi helps student loan borrowers navigate life transition with new flexible refinance option. SoFi's new 9-month interest-only refinancing option enables people with student loans to lower monthly minimum payments when it matters most. They said the following. A recent Gallup survey found that 71% of student loan borrowers delayed at least one major life event like buying a car or moving out of their parents' home because of their student loans. With Smart Start, members can refinance their student loans and pay only the interest for the first 9 months. This keeps minimum monthly payments low and eases financial stress as they start their next chapter. For example, a member refinancing $50,000 in loans over 10 years could reduce their monthly payment by more than $3,000 during the first 9 months. After the first 9 months, members will start paying the principal and interest for the remainder of the loan. Smart Start loans come with SoFi's competitive fixed interest rates and flexible terms of up to 20 years, providing members with control over the amount they pay each month and more predictability over their budgets. Which goes back to what Anthony Noto said back in 2023. At SoFi, we're trying to use AI to answer 3 questions every day. What must you do today in your financial life? What should you do? And what can you do? Remember, it's all about getting your money right. Of course, some of the ways to do so is to help you out throughout your financial journey in good and in bad times. And Smart Start is just another way for SoFi to make sure that the members are locked in into the SoFi ecosystem. Plus, it does help them get their money right. Now, you might be seeing something here under that tweet. This is another product that apparently they are working on, and that's the cash flow optimizer. Understanding your past spending lets us forecast the amount you'll need to cover expenses for the next 14 days. Then we can offer ideas for any cash remaining once those expenses are covered. And these are some of the visuals that SoFi Insider has found. He's posting these things on X for free. He's also found out that apparently they're working on the options level 1 product that everybody wanted. So yeah, I think 2025 is going to be quite an amazing year for SoFi and for its members. And of course, well, eventually the stock will follow. So could be a very, very good year for SoFi investors as well. So that's about it. Do share your expectations down in the comment section below. Of course, previously we've had double beats, triple beats, and then the stock goes up, but then a day or so later it goes back down. What do you think will happen on Tuesday and Wednesday? Let me know down in the comment section below. Like, subscribe, all of that, and I'll see you all in the next one. Bye-bye.